Yeah, the next chapter what we will be doing is unit 2 of accounting for special transactions, sale of goods on approval or return basis. Now, guys, let's try understanding the theory part of it and before we go in for any of the practical one. Now, generally, how does sale happen? B will go and ask A, saying that boss, I want to buy this goods. Then A will sell. Now, what happens in sale of goods on return or approval basis is B does not even want goods. Before that, A will send the goods. This is known as sale of goods on return or approval basis. Now, when will it become a sale? Is the question. A sending goods to B only when the goods are accepted by B, this will be deemed to be called as a sale. Are you clear? Done. Now, let us try understanding the situation. A sends goods to B. If B accepts, then it is a sale. If B rejects, then there is no sale. When A sends goods to B, he gives a particular time before which the goods have to be accepted. Now, I send goods on 1st March and I give 2 months. So the goods have to be accepted before 30th April. The challenge comes in, guys, remember, on 31st March. Why on 31st March it's going to be a challenge is because the goods possession is with B, but the owner is A. When I send goods, okay, B is having the possession of the goods, A is the owner. Since goods are lying with B, we will be recording the closing stock entry as if the goods are with B, but the books of recording is going to be with them. Are you guys clear? Done? Now there are 3 ways the whole accounting is done. And for us, the first case is the major one. The second one generally happens. The third one, it's okay. So there are 3 ways we do accounting. One is if we treat it as a regular sale. Second one is frequent transactions. Last one is numerous transactions. Are you clear? So we have 3 ways we are going to be recording the sale. For sale of goods on return or approval basis, case 1 is going to be what we are going to be treating as sale. Second one is frequent and the third one is numerous transactions. Are you clear? Now let us do the first case more, because your examination questions majorly are from the first case. Then we'll try looking into the second and third case. Now what does case 1 say? Case 1 says that you have to treat it as a regular sale. What does case 1 say? That you have to treat it as what? A regular sale. Are you clear? What does it mean? That whenever you're sending goods to Mr. B, I will be treating it as my regular sale itself. Now A sends 100 units at 10 rupees to B. Now the moment they say A sent 100 units at 10 rupees to B, we'll say it is sent on sale or approval basis. Are you clear? Done. So when A sends goods to B, I told you we shall be treating as was regular sale. Let's say on 1st March. 1st March, I'll be posting an entry as what? A sold goods to B. So I'm doing all the accounting in the books of A. A sold goods to B. What will be the journal entry? Done. Now on 10th March, B said, boss, I don't want the goods. I don't want the goods. Since you are treating it as a sale, the return is treated as sales return. Since B is saying that, boss, I don't want the goods, the journal entry will be what? As sales return. What will be the journal entry on 10th March when he returns the goods? Sales anyone any doubt till you? Done. Now I have sent what? 100 units at 10. There are chances that he might accept it at higher price or let's say lower price. Okay. Now let's question. B accepted the goods at 15 rupees. B accepted the goods at 15 rupees. What will be the journal entry? Now B is accepting the goods at 15. When you sent goods to B, first you started writing an entry as B to sales 1000. Why? Because when you have sent 100 units at 10 rupees, you are recording it at 10 rupees face value. So I told you, since we are going to be recording it as ordinary sales, it's going to be B to sales 1000. On 10th March, when B accepted it at 15, he's accepting at what? 5 rupees more than the price at which I sent. So I would be recording transactions only for that 5 rupees more. Are you clear? Are you guys clear? So the journal entry will become B2 sales for that extra 5 rupees. Are you clear, Kasak? Sabrish, it's not going to be 15, it will be for 10. When I sent, I'm going to be recording at 10. When he accepts at a higher price, I'll only be recording for that 5 rupees additional. See guys, A sent goods to B at 10 rupees. B accepted at 15. Since we are treating it at a regular sale, when goods are sent to B, the journal entry will be B to sales 1000 1000. But later you got to know that the sales he has accepted is at 15 rupees. Since I've already recorded at 10, the additional I have to record is only 5 rupees worth of sales. That's why I'll be recording it as B2 sales 500 500. Are you clear? Guys, are you clear? Now what happens if he accepts at 7 rupee? What happens if he accepts at 7 rupee? You have to perfect. We reverse the entry. Why? Because I have already recorded at 10, but now I have to record it at what? 7. So I'm losing out what? 3 rupees. So here it's not sales written, no, Harini. So I'll be recording it at Are you clear? Are you guys clear? Anyone, any doubt? Correct. Guys, done? Now, let us look into this. 1st March, goods cost 8 rupees, invoice price 10 rupees. I sent 100 units to B. Okay, what's the cost price? 8. Selling price or the invoice price is 10. I'm sending 100 units to B. 31st March, 31st March, B still did not send his acceptance. 31st March, B did not send his acceptance. Guys, one sec. Sorry guys, unexpected last minute because the class was not scheduled. I had my meetings planned up. Sorry. Yeah. So guys, see here, 31st March has happened. 31st March, and what has happened? B has still not sent his acceptance. What will happen in that case? Now, this is where the challenge lies in. See, because when you send goods to B, you record it as what? Sale. So in the books of A, you wrote it as B2 sales as 1000, 1000. Are you clear? Okay. Now, see, on 31st March, guys, just sit here on this date and understand. On 31st March, your accounts are closing. Is it a sale? The answer is no. Is the goods with me? The answer is no. But is it my closing stock? The answer is yes. Why? Because ownership has still not been transferred. In this case, the moment I treat it as sale, what is happening is you have already considered it as a sale. So what you will be doing, first thing, you are going to be cancelling the sale. How do you cancel the sale? Sales to be 1000, 1000. Are you clear? Sales to be 1000, 1000. Are you guys clear? Why is it not a sale, sir? Because you still haven't got the sold the goods to him. See, to if you have attended the law classes, Kumar, sale will only happen when the possession, consideration and an acceptance happen. In this case, only the possession has been transferred. Neither B has accepted nor he has agreed for a consideration. Okay, now by doing this, I cancel the sale. Are you clear? Now I have to record for the closing stock entry. Now, closing stock, remember this, closing stock will be recorded at the date, that is the closing date of the balance sheet, at cost price, because of conservatism principle. Because of what? Conservatism principle. And what does conservatism principle say? Cost price or realizable value, whichever is lower. In this case, my cost price was what? 8 rupees. right? So the inventories are with whom? It is with B. So I'll write it as inventories with B account debit to trading account 800 800. Are you clear? Because my goods value is what? At 8 rupees. Guys, done? Guys, do this question once you have done this. Guys, now look into this question. Guys, are you? Shall we do the first question? Now the first one, Badri is sending goods at cost or return basis at a cost of a cost plus. That means if the cost is 100, is adding 25% and is selling it at 80,000. Are you clear? Goods returned by customer 35,000, sent for approval. So for goods received on approval 80,000. Now the whole part for me is, for this 35,000 I have to pass a return entry. There's actually some mistake in the question, because if you see, this is 80, this is 35, this is 35, and this is 15. So total is 85,000. There is some mistake in the question, but anyway, let's just ignore it right now. I'll for my purpose I'll take it as 85. Returned goods waiting approval is 15,000. Now Badri records transactions on 30th March. Easy question. So the first one, let's try looking into it. When goods are sent to customer on sale on return basis, what's going to be the journal entry? What's going to be the journal entry? Sales, trade receivables to sales. Trade receivables to sales. That 80,000. Now, when goods are returned, you'll be doing the reverse of it. That is sales returns to trade receivables. Received letters of approval, no entries required. Why? Because I originally treated it as a sale entry. Are you clear? Now, goods with customers waiting approval. Now, what is happening, guys? This is the only part. Look into it. There is 15,000 worth of goods with customer. He has not approved it, and year has closed by. Now, in this case, what do you do? Step 1, you cancel the sale. Step 1, you cancel the sale. Correct? How do you cancel the sale? Sales to trade receivables 15,000. 15,000. Second one, you have to record it at the cost price. What's the journal entry for it? Inventories with customer to trading account. Now there comes a challenge. Now there comes a challenge. What is the challenge? To find the cost price. I know cost price if it is 100, 25 rupees is the margin, 125 rupees becomes my selling price. Here my selling price is 15,000. My objective is to find the cross price, so do the cross multiplication. 15,000 into 100 divided by 125. How much it is? Are you guys clear? Guys, easy. 4 mark to 6 marks in your exam. Are you guys clear? Guys, I'll give you guys 2 minutes. Try out this question, illustration number 4. Guys, do this question. Guys, done? Illustration number 4. Guys, done? Guys, shall we do? Guys, done? Date given, not given, don't worry too much. Okay. Uh, let us do this question. And anyway, it's come in the exam, so it's better that we do it also. Uh, it's come in our November 2018 paper. Now there is first time we are coming up with balances. So let's try looking into it. How does it look? Mr. Ganesh sends out goods on approval to few customers and includes the same. So on 31st, trade receivables stood at 75, which included 6,500 sent on approval. So that means these goods were sent out at 30% over and above the cost price, sent to Aditya and this one. Mr. Aditya sent acceptance on 25th. Bakiram returned the goods on 15th April. Make the adjustments and show how this will appear on 31st March. April 2013 closing stock of the inventories. Okay, guys, now if you really understand what is happening here, let me first focus only on 31st March. Trade receivables and the closing stock value. Okay, insurance and the now out of my trade receivables, guys, important, listen to it. Out of my trade receivables of 75,000, there is 6,500 worth of goods which were on sale of return basis. And this 6,500 comprised of two guys, Aditya 3,900, Bakiram 2,600. Now, what will happen? Let's try understanding it. First thing, if you send goods on sale on approval and these goods are not approved, end of the year, what I should be doing? I should be reversing the sale entry. If I reverse the sale entry, what will happen? The journal entry becomes sales to trade receivables. So that means my out of my 75,000, I have to reduce 6,500 and my sales value, trade receivables value will be 68,500. Are you clear? Guys, first understand the concept and then I'll show you the presentation. How does it work? Sales to trade receivables. Are you clear? Done. Now the second part is I have to add it to my inventories, but it should be at cost price. Now at what price are they giving? Are sent out to 30% over and above the cost. So if the cost price is 100, that is trade receivables, sir. Kumar, trade receivables value was 75,000. Out of it, 6,500 was the goods where I have not got approval on. So my new trade receivable value is 68,500. For that, I passed an entry as what? Trade receivables to sales. Done. Now, if I say I have a goods costing 100 rupees, if I'm having goods costing 100 rupees, okay, 30 rupees is the margin, 130 rupees. This is 6,500. I need to find the cost. What will be the cost? The cost will be 5,000 rupees. Are you clear? So if I do this, what's the journal entry? Thank you. Inventories with B2 trading account. Are you guys clear? So my new inventory value will be, earlier it was 50,000, now you will add this 5,000, it will become 55,000. So in this year, if I have to change the balance sheet after these two entries, this is how it will look. Are you guys clear? My trade receivables were reduced by this one. Done. Now if we come to the next year, in the next year, what you should be doing, see here, Aditya sent in acceptance on 25th, Bikram returned goods on, make adjustments. No madam, they have asked only on 31st March, no? That means they have already passed an entry. If they would have not passed an entry, how it would have included in trade receivables, Harini? If you do it, it will become a duplication error. Right? Now guys, see here. Let me come on April 1st. In April 1st, what you have to do is you have to again re-record the sale entry for these two, because the goods are still lying with him and I need to give an approval yet. So I have to re-record the sale entry. That will be Aditya, Bakiram, 2 sales, 3,900, 2,600, 6,500. Are you clear? Done. Now Aditya sent acceptance. Do you have to pass any entry? No. Why? Because I've already passed the sale entry. Bakiram returned the goods. Should I pass the entry? Yes. I have to do the reverse of sale entry. Are you clear? Jami, clue, here it is 6,500, here it is 6,500, and they are saying that these goods were sent at cost at over which were 3,900. So there is enough clue that it is at the invoice price. Guys, are you clear? Easy? Guys, is it easy? Guys, this was an 8-mark question. So, conceptually, if you have understood it, it's awesome. Done? Okay. Guys, this is actually wrong in the book because they should record the resale here. See, these three things are fine. This one, it should be on 1st April. Again, they should be recording it as Bakiram to sales 3,900, 2,600, 6,500. This is actually done in your wrong in the book. Then on 25th, no entry. 15th April, it's going to be sales to Bakiram. Are you clear? Can we go to the next concept? Now guys, see here, whenever okay guys, see here, we are doing the second case when goods are sent frequently. When goods are sent frequently, what will happen is we maintain, see here, we maintain a specifically ruled sale or return book like this. Guys, are you clear? So you need to make this chart or the table which has three things: 1, 2 and 3. Are you clear? Now guys, see here what I do. I write the date, particulars and the amount, that is the party to whom. If he has returned goods, I will record it. If he has approved goods, I will record it if it is balance. Now where does accounting come into picture? See, goods sent on approval. Under the second method, no entry is required because you are just sending the goods. When he returns also, since you have not recorded when you have sent it, even while returning it, no entry is required. The third case is when goods gets approved. When goods gets approved, what will happen? This will be treated as a sale. Only when goods get approved, you will do a sale entry. Then whatever is balance, that is whatever the customer is having the goods and year has passed by, you will only pass the inventory entry. So in this question, the drama is simple. If you can make this table, right, only for two things you have to pass entry. One is for goods approved and another one is for the balance. For sending or return, no entry is there. Are you clear? Guys, are you clear? Then why they exist? What exists, sir? Correct, there exist only two entries. Now guys, let's do one of a question and then go to the last one. Everyone read this question, illustration number 5. Sir, sale entry we are going to be passing only when the customer accepts. That's the difference, no? That's why it's a different method, no, Kumar? Guys, see here. So guys, see here, I'll make a table, date, particulars, I'll pick up this question and try doing it. On date, see here, 2nd May, P 17,000, then B on 8th May, B 25,000, 12th May, Q 25,000, 18th May, D 5,500, 20th May, E 2,000, R 28,000. Are you clear? No, I am doing it because I just wanted you to understand this question. They wanted us to do another method. I'll teach because I don't have a question for the second one, so I'm just doing it because it's just more of a concept. Clear? Now, second one is what? Accepted. Third one is what? Returned. Fourth one is balance. Now, which all has been accepted? P and Q returned the goods. So, P 17,000 returned. Then Q 25,000 you have returned. D and E signified that they accepted the goods. D and E. D 5,500 and E 2,000 have given their acceptance. Then who else is there? B also has given an acceptance. Who's the last guy left? R. Done. So the balance left is guy R 28,000. Are you guys clear? So if I have to make the table, this is how I fill it up. Are you guys clear? Guys, I don't have the question for the second one. That's why I'm just doing it through the third example question itself so that you understand how it has to be done. Are you guys clear till here? Correct. 2 entries only we are going to be passing once the table is done. Are you clear? Now, first entry is for sale. Who are the sale guys? B, D and E. B account, D account, E account. To sales account. B is 22,000. D is 5,500. Right? I should have known this at cost price. I'll write an assumption. Since cost price is not known, assumed that R's 28,000 is the cost price. So the journal entry for the closing stock is what? Correct, Sri Charan. So inventories with R to trading account 28,000. Are you clear? So in this case, only 2 entries we are going to be passing. That is one for the sale, that is goods sent and approved, and the second one is going to be at the closing stock. They should have been at the cost price. I don't know the value of the cost price. Are you guys clear? Easy? Guys, easy. Sir, I told I'm doing the second method for this third question. Kumar, when you have not recorded an entry for sending the goods, why would you record entry for returning the goods, Kumar? I told you in this case that's why I'm making a rough note, because it becomes too hard to track every time goods sent approved. Since it's a frequent means what? Very often you're sending this goods, it becomes hard to track. That's why I make one table and then check the table and only pass two entries. One for the sale made and one for the return for the goods available with me on the closing stock. And I told guys, since I don't have any question for the method 2, I'm doing the third method question in this. Guys, done? Can we do the third method? Guys, done? Guys, now let's look into the third method. What happens in case of the third method? Right? In case of a third method, we do something called as a memorandum book. What do? We do a book called as what? Memorandum book. Now, here, when the transactions are numerous, I do a memorandum book. This memorandum book, basically there are two ledgers. There are two ledgers. Ledger number 1 is called as sale or return day book. Second one is called as sale or return ledger. Okay, this ledger will contain all the customer accounts. Okay, and the sale or return book, it's a primary book where all the transactions are recorded. Now you might be wondering, what is this? What are the things are happening? Let us just try understanding it through an example and then Done? Okay. Whenever, guys, see here, this is a memorandum book. Memorandum book means a rough book. Okay. Whenever goods are sent to customer, they will be first recorded in what? Sale or return book. From there, you record it to the sale or return ledger. In the sale or return ledger, whenever goods are sent, we are going to be recording like our regular way itself, that is customer account debit to sale or return account. Are you clear? Just understand the flow. When we do a question, you will know it extremely easier. So just understand, was first I have to record it in the sale or day book. From there I have to record ledger. In ledger anyway the entries are the same. When goods are returned, right, you will again record first in the day book that the goods are returned. From there, right, you are going to be do the reverse of it, that is sale or return account debit to customer account. Pretty much the same. Okay, this is when goods are sent. This is when goods are returned. Only when goods are accepted, then I will be recording it in the recording as a sales. Guys, see here, it is not sales account, it is sales or return account. Sales or return account. Only when you get an acceptance, you'll be recording it as a sale. Are you clear? And finally, end of the year, you're going to be recording it as what? Your normal inventory to trading account at cost or realizable value. Now here the drama is I have to make two entries. Customer, these are going to be in the memorandum books. Are you clear? So these are rough books. So the drama is extremely simpler if you understand the logic. Goods sent, anyway it's not a sale. See, in the previous question what we did, we were recording it here. Only when it is sale or balance we are recording it here. Now whenever it is here, you pass it in instead of writing as scale, you are going to be writing in the memorandum book as what? Customer to sale or return account. When he returns, you'll record it as sale or return to customer for these two. Finally, only for these two only you're recording it as sale and inventory. Are you clear? Now, the same question they have asked me in this. Now let's try looking into it. A firm sends, okay, this is our last question for this chapter. A firm sends these goods, right? So when I'm making the sale or return ledger, what is going to be the journal entry when I send goods? It's going to be customer to sale or return. They have asked me to make an account, so I'll make sale or return account debit. In this, by P B Q D E R 17,000, 22,000, 25,000, 5,500, Are you clear? Out of which guys, after which, see here, one, which are the ones which are returned? Let me go into that first. Returned is what? P and Q, that is 42,000 goods are returned, 17 plus 25, 42,000 are returned. So here it will be writing it as 2P 2Q. Are you clear? What is left? 2R, whatever is there, you write it as balance 28,000, because this is going to be carry forwarded to the next year. Are you clear? Now balance whatever is there, that is 1, 2 and 3 are going to be my sales. Yes or no? Guys, I think the numbers, just check into it. 22, 27, 500, 29, 500 is gonna go to my sales account. Are you clear? Done. Then they asked me to make customer P account. Customer P account, what is there? P was the guy who took goods and he also returned the goods. Correct? P was the guy from whom you have taken the goods and also returned the goods. So in P's account, if I have to do, it will be to sale or return 17,000, buy sale or return 17,000, because he did not make a sale. Are you clear? Are you guys clear? Let's say they would have asked for B. If they would have asked for B's ledger account, you will only do B to sales 22,000 and then you would have a buy balance, because B agreed for the goods. Guys, are you clear? Guys, are you done? Guys, are you done? Easy chapter. Very alternative attempts. You keep getting it for an 8 mark or a 4 mark. Don't miss this one. Correct. Correct, Sabrish. Guys, done? Done? Guys, take a break. I'll just inform you in 2 minutes. If there's a new link coming in, we'll do that last topic on account current due. That's the last topic we have. We'll see you guys.